Hey, this is Sasha. Thanks for joining me here for another episode on Hungry for Returns, where I answer your trading and investing questions based on my own past successes, failures, screw-ups, knowledge, education, study, all that good stuff. So if you have a question, you want to submit one by voice, which means you'll get a more detailed answer on video, and then we can go on trading screen and answer your question. Now, today's question is kind of based on a follow-up question that I did last week. I thought it would be just more wiser or smarter to do a cover on both of these situations. So last question we had, and it was all about the difference between buying and selling a call and put. So I did this video a few years back, almost 4 or 5 years ago, and people, watch it like crazy, I guess. So what they do and wonder is that, hey, I had a question from Joe Simon, what's the difference between selling a call and buying a put? So I answered this question the previous week. And what I wanted to do this time around was talk about actually buying a call and selling a put. What's the difference? Now, this video in the past right here, what you could do is definitely go to it and watch it there as well, where we go in detail. But here we're going to go more specifically onto buying a call versus selling a put. And it's kind of a follow-up to the previous one. So to do that, let's go to the trading screen and talk about buying a call. So buying a call is probably the easiest thing that people think about or do when it comes to trading options. So when you buy a call, this is the risk profile picture that you'll see. And if you don't know what a risk profile picture is, it's basically, here is your profit and loss. So when you look at it, this is your zero line, meaning you don't make money or lose money at this point at expiration. This is our expiration line. And here is your current T plus zero line, meaning that as the stock wiggles up or down, and here is our stock price. So stock price. What happens here is this could be $60, $80, $100. This could be $40. So in this case, when you buy a call, there's a few things that go on and happen. Number one, you have unlimited profit potential. Okay, so that's the name of the game when it comes to buying a call, unlimited profits. That's why people really, really like this. The downside is you lose if the stock stands still. Why is that? Well, if you're right here and the stock stands still, with time, this gets closer and closer to expiration. And what it means is you have your theta decay or theta burn. Okay, so stock stands still, you lose money. Stock goes down, you lose money, right? Obvious, because you're buying a call, you want the stock to go up. Stock goes up, and it's got to go up quite a bit to compensate for the theta burn. That's where you make money. So that's what happens when you buy a call. When you buy a, when you sell a put, you think, hey, well, I'm not buying a put because a put. Okay, so if we look at, let's just talk about here selling a put. When you normally buy a put, so here's our first little intro to this. When you normally buy a put, you kind of go this way, right? So you're making money as the stock goes down, right? So again, you think of it, here's our line. So here's our stock price. Here is 30, 40, 60, and so on. And here's your kind of zero line. So you make money as the stock goes down. So you would think when I sell a put, wouldn't it be kind of like buying a call, because wouldn't I make money profiting? But no, that's not the case, because what happens is the graph is kind of flipped on you. So in this case, it's going to flip this way. So this is buying a put. This is selling a put. In this case, buying a call, this is buying a call. Selling a call, you would kind of do the angle this way. So this would be the selling call, and this is the buying call side. So how does selling a put, what does it look like? Well, it's going to look like this, what we just talked about. Not here. Here, I got more space this way, and like that, okay? So that's what it really looks like when you're talking about selling put, okay? Right there. Your zero line is going to be kind of like there. Okay, there's your zero line. You still have your stock price here. Okay, but you don't have unlimited profit. Now, why would someone sell a put? You know, a lot of people would say, that's stupid. Well, I can make unlimited amount here, you know, and if I go ahead and buy a put, I can make unlimited to the downside. Well, why the heck would I go ahead and sell a put? What's the point? Well, the difference here is here, if the stock stands still, you don't make money. Here, stock stands still, you make money. Stock goes up, you make money. So in both situations, you make money when the stock goes up, right? Because this is going this way to the right is the upside. So you make money in both situations if the stock goes up. The difference here is you make a flat amount, but you make money when the stock stands still. Stock stands still, you make money. Stock goes up, it makes money. Stock goes down, you lose. So here you're winning 2 out of 3 situations in a way. Here, stock stands still, you lose because you lose from the theta burn, the money every day that you lose from the option decaying. Here, stock goes down, you lose, and stock goes up, and it's got to go up quite a bit, you make money. So here you're only winning 1/3 kind of the time or chances. So let's go look at a trading panel and platform for you, and I'll give you this example. We're going to go ahead and let's just use Square. And when we look at this, okay, if I go ahead and we're talking about buying a call, and I think this stock is going to explode to the moon. Right now it's $61 a share. So buy a single, okay, analyze the trade. Here is my thoughts, okay, it's going to explode to the moon. Boom, there is my call option. The problem with this call option is, well, you have this theta. This theta right here is negative 262. So I lose $2.62 every single day it stands still. Now, if I go a little closer, let's say I did a different option contract, the 65, I lose more than that, right? I lose 371. So depending on the option you're trading, that theta burn kicks in much more so in different situations, but you make unlimited amounts. Stock stands still, you lose. Stock goes down, you lose. Stock goes up, and it's got to go up quite a bit. In fact, up until this point, okay, because here's your zero line. If I zoom in, you'll be able to see that. Okay, there is our zero line right there. So it's got to go up way past that. In our case right now, stock price is 62. It's got to go past 66 at expiration for us to kind of make money. Whereas if I go ahead and let's just say I sell a put, which is called selling a naked put or selling a naked contract, here stock stands still, I make money. Stock goes up, I make money. Stock goes down, even if it goes down a little bit, I make money. And it's got to stay above basically my selling price at 55 for me to really lose. Now, remember that the white line is today, and with time now you're making positive theta. So as I go ahead and move the days forward, that white line gets closer and closer and closer to the green line. If I'm talking about the buying a call, same thing. With time, that white line gets closer to the green line. You see you're losing. In this case, you're losing $126. If I sold the put, I'm making $107 or so at this point. So that's the difference, is stock stands still, you're making money on the selling side because you've already sold it. You just have to let it expire. It's like paying your insurance company. They've already got your money. They just have to wait for you to not get into a car accident, and then it's free money for them. So that's kind of the difference. The problem, of course, you have is unlimited loss in this case. So what normally people do is they take that 55 and they'll buy something to protect it at 50. And now you cap it at that 50 right here, and you create kind of a vertical. So that's ultimately kind of the difference between, you know, buying a call and selling a put, is that one, you do have unlimited profit potential to the upside with a call, but what's the chance of a stock really, really exploding to the moon? You know, it's kind of slim. It does happen, but it's kind of slim. So that's why a lot of traders, they sell premium most of the time, and then they buy the others for kind of protection. So in this case, you're actually making money as things stand still, and they can wiggle around there all day long, and you're still going to collect your money day in and day out, or month in and month out. Anyways, thank you so much for joining me. I got something pretty amazing to share with you. If you didn't know, we have our upcoming book, Mindsets of a Master Stock Trader. Just check out our website, Rise to Learn, coming out, or actually it is already out by the time this video is launched. Right now I'm shooting this video 17 days in advance, and it's, 5 in the morning. So anyway, go ahead, check it out, and register for our newsletter list at the end of this video. And that way you get notified any discounts, promotions, specials that we have going on with this book or any other future products, courses. There's also some coupon codes inside the book for our courses, which just by buying the book, you can get a coupon code that saves you a lot of money on our other courses and classes. So check that out. If you're interested about learning about the inner game, psychology, mindsets, trading, all regarding emotions and those kinds of things, called Mindsets of a Master Stock Trader. Comes out September 23rd or 1 or 2 days before that, depending on when Amazon makes it live and so on. We're trying to schedule it right around that time frame. But other than that, go ahead, check it out and get the book. Anyways, thank you so much for joining me. Remember to subscribe on YouTube or submit a question by voice if you have one. Thanks for joining me. Remember, in the end, do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.